Today I'm going to talk about Unchained and how we've navigated as a Bitcoin native species. I'm going to draw on an analogy that kind of hopefully illustrates that. Just a little about me. Drew and I started Unchained in 2016. That's really our second startup. We're actually both dropped out of UT to start our first company called InfoChimps, sold that business in 2013, and then really got into Bitcoin. At Unchained, he and I, along with helpful folks like Parker and others, have raised over $100 million of equity capital, several times over that in debt capital to fund our lending business. And part of what really keeps me in Bitcoin, part of what, when I launched into it, convinced me I could work for a decade or more in this industry. It's just that it's such a multidisciplinary topic. To really grasp and understand Bitcoin, it's an incredible prism for so many other ideas and concepts, whether it's cryptography, engineering, energy, sociology, or markets. And so that in that kind of spirit is where I'm going to take us today on analogy that really influences a lot of my thinking about our strategy. But before that, just to make sure everyone's understanding of Unchained is rounded out, so Unchained has a core suite of services around being a financial services provider for the long-term Bitcoin holder. We started with the idea of lending cash, lending dollars against Bitcoin as collateral. That led us into the path of having a standalone custody product. And around that experience for custody, you can have an IRA account, or you can trade directly into and out of cold storage with us. And all that's facilitated. What really differentiates Unchained is our clients hold keys. So among all the account types you have at Unchained, a client is holding generally at least one or more keys. And so that, as I'll get into, that's really important to how we operate and how we've survived as a firm. And by some numbers, just to kind of characterize Unchained and how far we've come. So we have, current prices, still over $6 billion of Bitcoin that we help secure. And importantly, that's across over 12,000 keys. So really kind of think about that, a place like Coinbase or other centralized custodians that hold more Bitcoin than might be at Unchained. They're generally holding that with like less than a handful of keys, sometimes just one. Maybe it's sharded, maybe there's something else happening there, but that central point of failure, it's a really important artifact to acknowledge. That's in a lot of how legacy finance works. And so it's a really comfortable stance we get to have at Unchained that says that risk or that danger of the security of keys that protect the Bitcoin, it's extremely decentralized, really well spread out across all of our clients. And so in those clients, number in the 7,000s. We've had 0 loan losses in all of our history of making loans against Bitcoin. Not many can say that. And we have thousands of accounts across these different account types. So leaving some numbers, I kind of want to walk us into an analogy about the Bitcoin ecosystem. So what influences my thinking when I think about how we've adapted as a firm and what's ahead for us and many of the other folks in this room. So some of us are familiar with this tree of life concept. There's a really great visual that covers it. The life that began on Earth as bacteria has since gone to fungi, fish, mammals that we kind of walk the Earth. And so there's a couple key moments in that development of life for our planet that influence the types of species that evolved and those that went extinct. And so I think there's an analogy you can draw both in looking at the kind of fiat history of what started as commodity money, things like gold, and then government-issued currencies, banks, bonds, securities, and all the markets that have kind of developed around that. Some of the firms and institutions we use today still look like their ancient predecessors. Gold is still gold as it was thousands of years ago. Some institutions and things we rely on, maybe in the more derivative markets or higher levels of financial services, are more modern concepts. And they depend on things underneath them, whether it's custodians or other counterparties to effectively operate. Bitcoin obviously being newer and only having about a 15-year history on its own, kind of has its own tree of life. There's a monetary policy, it's fixed supply. There's a code base we all depend on and use. And then there's the kind of mining and adjacent energy ecosystems. You have transaction market, exchanges. All these things have kind of built on top of each other over the last 15 years. Some of them are more interdependent than others, but it's kind of the stack we're all faced with as we work to build on Bitcoin. And so in that kind of history for Bitcoin, I think having thought about the space hard for 10 years, worked actively in the space for 8 years now, there's a couple key moments that I really map onto that have really are part of why Unchained is what it is today. One of those moments, one of those things that does really differentiate Unchained, as I was mentioning, is this kind of consumerization and standardization across self-custody. So the idea that 10 years ago, I think was just as when Trezors were first being sold, maybe 2013, 2014, that really started a wave of now individuals having the capabilities to more easily hold their own keys in a way that didn't require too much technical expertise. And so that kind of capability to then come out and build traction is what allows a platform like Unchained to aggregate these individuals into one cohesive financial service. I contrast that with a company like BitGo, which maybe started around 2012, 2013, before there was any kind of mass market of individuals doing self-custody. BitGo is a great firm. They've obviously survived a lot of cycles and are doing well, but that landscape that they launched in didn't have that feature, even though the early business plan for BitGo might have looked like Unchained in terms of multi-sig as a concept and developing a firm around that. They didn't have the same environment to kind of stretch into that we do. I think the next kind of major thing that happened for Unchained after having started in 2016, 17, being able to build on the back of these hardware wallets, was the market cap of Bitcoin just getting big enough. And this really, you saw it kind of in late 2020 and 2021, that really kind of before that time, as Bitcoin just kind of teetered in the tens of billions of dollars of market cap, it was hard to kind of make the case sometimes to investors outside of the 1031s and general ventures of the world who really got it. It would be hard to see that market size and that total addressable market that could sustain more than just a handful of firms doing financial services for Bitcoin. So that getting that kind of threshold or getting out of that that kind of low point was important to sustain firms like Unchained. And then since then, you kind of had a lot of firms, many names we still remember, BlockFi, Celsius, these others. I mean, they brought that very fiat-minded, fiat-adapted business model into the space, and we saw they went extinct. So it was not something suited for this market, and we see the results in the bankruptcies. This last point is kind of something that I think about towards the future, and it's kind of I don't see it discussed a lot, or I think it's one of the under-discussed points about the bank failures you saw last year with SVB and First Republic. Those happened so fast. Those happened like within days or in like hours, kind of a thing. And that for me highlights what kind of a world we live in now. I mean, news doesn't travel by letter or horseback or telegrams. It travels like instantaneously online. And so the kind of medium that fractional reserve banking grew up in, which could depend on maybe information being a little slower, and so if banks having some risk issues or troubles, like they maybe have time to address that before everyone goes and demands their deposits back. That kind of a thing is, that's just way more at risk now with how fast news can travel and how fast people can go into their digital banking experience, and they don't have to wait in a queue to get their money out. They can start queuing up wires right away. So that kind of a fact is something that really helps me, back to the idea that all of our clients hold keys at Unchained. I mean, those, all the Bitcoin could leave tomorrow, and Unchained would default with no counterparty risk. There's just this kind of, the stance we get to have as a financial services firm that helps build trust, helps us, build on the next client relationship when they know that there's not that kind of run on Unchained that could happen. This idea of evolution, this idea of life, it's been interesting to explore. I reviewed the Ascent of Money by Neil Ferguson and kind of grabbed this quote from it, which I feel like fits it. He drew an analogy with evolution in financial services that I think is very appropriate. But I want to even go a little further and just talk about, tactically and as a startup, what other concepts we're depending on that we can borrow from evolution. So those topics, starting with niches. This is a slide from Drew's and my original pitch deck for Unchained, 2016 era. We're looking at what are the things that exist then, what are the financial services that are there, asking ourselves, is there a market for that, talking to investors about it. And you can see there's some names you recognize, perhaps, probably a lot you don't, because they were defunct even years ago. But it's also just like this idea that each of these are little niches that exist in the current financial services landscape that were underserved or were like unoccupied niches. So for us, as entrepreneurs, we were looking for what are those underserved and unoccupied niches, and what is the best one to start. We did start with lending, that soon evolved to custody and the other things we do today. But that was essential for us, is kind of finding that initial attack point. I thought it's worth reflecting, and it kind of relates to some of the stuff we already talked about, but at least like why are so many of those logos no longer here, no longer around? One big one, of course, that didn't respect regulations. Regulations in the US market especially can kill you. It can kill your ability to operate. You see it in traditional finance just as much as here. So a lot of those places were just not well advised on regulatory approach. Next is, of course, as I mentioned, these kind of fiat adapted business models, depending on often sitting on other people's money or lending out others' money for returns. Those, when confronted with a market that is Bitcoin and the kind of credit risk that is here, is just not workable. And kind of what I want to bridge into is this idea is that they were also, they're trying to do something kind of too high up on the food chain, that like what persists through these cycles in Bitcoin is not necessarily always these high level financial services, but this kind of like these kind of lower level layers that tend to survive through the hard periods. So those levels, in my mind, there's this something like a food pyramid, also called trophic levels in biology, which says that at the lower levels you have plants, things that capture and store energy at a high efficiency, and then you have the critters that eat them, and then the critters that eat those critters, and that kind of food chain. And so when there's a shock that happens in that ecosystem, things at all levels perish, but the ones at most peril are the ones higher up in the food chain. So for us at Unchained, we don't do mining. Well, we work with some mining clients. It's a good community that we love to work with. It's really that savers layer that we've always been most closely attached to. And so even when last year, as a lot of trading volumes disappeared in the space and our trading desk saw lower volumes too, we continue to be successful every month onboarding new clients as savers and helping them secure their Bitcoin. So I think a lot of places that start trying to be fancy and do derivatives or things up there, they're at risk because when the tide goes out or when the market slumps a bit, they're going to be starving a little bit more than others that are at the lower level. And so lastly, just kind of highlighting that for us, it's all Unchained has had we've maintained the vision of being a company for the long-term Bitcoin holder. What that means always in the short term is kind of sometimes in a shifting and a dynamic set of services. So the fitness landscape of what survives is not always like a one track kind of a thing, but there are some of these principles that we've tried to follow and I think others can follow to ultimately survive. What that looks like for us right now, continuing to advance our mission of onboarding more individuals to self-custody. We have just a few under 10,000 today. We'd like to end the year within the tens of thousands of individuals that use us for self-custody. Along those lines, we're also going to be working with those individuals, and more we have RIAs and the folks that advise those individuals on their wealth coming to us wanting to partner together and how all of us can work together. So onboarding more IRAs to our platform is one big thing we're working on actively. Also making trading easier. It is a more of a bull market. There's a lot more volume there. We want to be the easiest place to buy and sell into and out of cold storage. In the future, though, things we do look at for next year and beyond is just the institutional market. It's there. We have some institutional clients, but a lot of that focus these days is more on the ETFs and the other kind of market infrastructure that exists that they're closer to. But between that and insurance, I think are some of the next bigger categories that Unchained wants to be looking at. And that's it. Happy to answer any questions.
All right, questions for Joe. We're going to start over here.
Joe, thank you for Unchained and the contribution to the Bitcoin space. Where do you see yourself 5 years from now? It's 2029. Where do you see Unchained?
Business line profitable for everything we do already. Probably have some base of further innovations we do. If you've met Drew or know Drew, his brain goes pretty far. He's thinking about ideas, I think, 30 years out. And so that probably looks like some of those higher levels beyond custody that either look like the Lightning Network or other L2 type options that we could pursue as either participants or to launch products and services in those areas. Hey.
Hello, my name is Julian. Can you elaborate a little bit more on the insurance integrations that you guys are thinking about?
Sure. So it ranges. I think insurance is a really strong value proposition for institutions, like to make an allocation or to want to custody with somewhere. It's a really high value prop on their list. So for us to do that in a cost-effective way that also loses our multi-institution infrastructure, it's kind of a key element we want to solve. And we've talked to some insurance providers. There's other companies in this space that are also working on approaches there. So that's, for us, it's just kind of an evolving conversation. I also think about it for individuals. So generally you're pretty good. Like about as good as it gets is these days having 2 keys of your own that are in cold storage and backed up somewhere. But even still, there can be things that happen, weather events or other risks, that to be able to ensure that for those individuals would also be an approach we would take.
We're back here.
Hello? Yes.
Hey.
I wanted to know how you see capital markets maturing around Bitcoin collateral. Don't sell your Bitcoin.
Yeah, the capital markets journey around Bitcoin, it's been one of the most shocking things starting this business. Bitcoin looked like such simple, obviously good collateral early on. Our other slides in that same deck I showed would have showed like, oh, our interest rates are in the teens now, but just wait, it'll be low single digits in a couple years, and it's like 8 years later, and no, we're definitely still in the teens. And some of that's it's a couple factors. Banks and their regulators aren't comfortable treating Bitcoin as an asset still, and a lot of the lowest cost funding for any credit product comes from banks. And then you've had just kind of other classes of institutions, either insurance companies or pensions, also not comfortable getting into the asset or you're treating it as collateral. And then outside of that, you've had the kind of typical private credit funds that do weirder things and have done the weird thing with us of lending us Bitcoin, but their cost of capitals are pretty high. So I think what we'll see is really as now, and also last year it was just dead. The capital markets, Bitcoin or not, we're pretty much at a standstill. A lot has warmed up. The price actions helps, and even the ETFs help a lot. Is now that kind of middle category of the pensions institutions, like they're able to take it more seriously now. You can get through a lot more of these conversations. I think you will see more capital formed at that 10, maybe 8 to 10 kind of percent threshold for this kind of credit. But to get really, really lower, it's going to require banks, which is going to require somewhere more regulatory movement or regular movement by like specifically FDIC and others that would allow banks to do that. Do I see us longer term lending? Oh, longer term loans. Yeah, I mean, I think if you really stomach it, and like the data would show, even for Unchained or for Bitcoin's history, no one's lost Bitcoin for holding it 3 years or more. Like I think almost exactly like that. There's like a trough there, and so yeah, if I do think about like good long-term credit products, maybe leveraging that fact or some of that history could be nice, and you might see bonds or other kind of related instruments around that. Not something we see quite active, and I think love to see even just the shorter term stuff we do be in a tighter price.
All right, we got one more question here.
Hi, I have a question about where are you guys with non-institutional collaborative custody?
And where are we with non-institutional collaborative custody?
Like for someone like me who's still uncomfortable holding their own keys, are worrying about how to separate their locations and so forth, are you guys going to offer that as an option?
Yeah, so
for
and we do have an
individuals?
option for you in that we have key agent partners where a client of Unchained today could choose to not hold any keys and delegate those keys to us and some other institutions we work with. That does carry more of a kind of a more of a standard custody fee model based on bips or percentage of those assets over time that are stored in that model. So there's an option for that. And sometimes what we like is we try to create that product strategy as well as something that graduates people hopefully into holding their own keys. I mean, we hold the opinion that that's still a good destination for people. So people can start with no keys or start holding one key and then eventually hold two if they'd like. Even holding the one key, it's a nice additional security protocol for us as another key signer. If we observe the client has made a signature, it helps us feel confident in the validity of that request and through our verification procedures. So even just kind of starting there is nice, and then you can feel maybe better that if you did lose that key, there are two institutions backing up.
Okay, we do have time for one more if there's any more. Yep.
Hey, Joe, thanks for your presentation. Just wondering, we're Canadian. Do you offer Unchained in Canada? And if not, when?
Yeah, so we do offer our custody accounts pretty much in Canada, worldwide, even New York. The beauty there is us not being the custodian, the client's the custodian, they hold their own keys. And so that absolves us from a lot of local regulations that tend to be about control if you're controlling someone else's Bitcoin. I should admit, we don't work with OFAC sanctioned countries, so not always worldwide, but and that's something that gets to the regulatory piece. So it's like that kind of base layer of custody and enabling and equipping clients to hold their own keys, really safe territory for us to do worldwide. The next level of financial services that may include lending or trading, we are judicious. We do look at like local jurisdictions, and so don't have availability in Canada today for buying and selling. Would love to someday.
Thank you.
Anything else? Another round of applause for Joe Kelly, CEO of Unchained.